What is up, everybody? Welcome back to Vant and Rant podcast episode 588. I don't even think today needs a freaking introduction. Look around you. You're in the threshold of hell, man.
We are in the threshold of hell, and people don't even realize it. It's great.
I don't even know how many times we have to shit on England or Japan or anyone before they just, get it. But anyways, we'll get into that. What's up, Mike? How was trading for you today?
Oh, it's great. What's great about today is everybody gets pissed off. And I think ultimately everybody's been pissed off. But this has probably been one of the most easiest trading days in a long time. Something's got to break, because following this dollar rate trade is just insane to me. I can't believe it just worked every single time. I made more money pre-market before the bell even rang. I made more money by 6:30 a.m. than I did the previous 2 days.
Yeah. I concur. Today was an absolute layup of a day. I had a blowout day myself, and it was just the easiest things. I don't think I missed one trade and called one trade incorrectly in the entire day on this, on the stream and everything. It was just beautiful, so easy.
Awesome.
But
Good stuff.
Look.
The markets are falling. The markets are going up. This is nothing. This is what we needed. Okay, because in a bear market, you got to have the market. I'm sorry. I just want to trade here. It's like, come on, man. Rates are falling off. Dollars falling off. I want to buy, baby. It's crazy, man. It's crazy because the market needs to go up. Everybody's looking for it to go up. And it's happening right at the right level. And, because you can't keep on shorting with it constantly going down. So you need it to go up so you can reload your shorts. And we're getting that today.
Yep.
Yeah. It's just crazy. I'm so incredibly distracted because it's just like all kind of opportunities.
I know. I can't help but just stare at gold and oil, and it's just nuts out there, dude. Oil it's just nuts out there today. But why don't you pull up the charts and show us what you're looking at? Because it's just been a crazy day, and you obviously had a couple headlines come out today that really just shattered everything for you, and you got the ball rolling.
So, yeah, and here's the breakout I was just calling. I just said buy. The dollar rate's falling off, and look what the SPY's doing. How easy is this? I just called this trade.
Yeah, it's...
Oh, my God. Which tells you something's getting... Look, okay, let's get into the charts. Let's get this thing back on track. So, let's look at the charts. Monthly chart, nice area to bounce out of. I think ultimately we're looking at the 50 moving average. That's what I'm looking to as the next stopping ground. That kind of gives you on the weekly the 200 moving average. So I think those right there is really realistically the next stopping ground to the downside for the market. And then you got this area right here. The 339 area. Okay, this would be the area where we kind of topped out pre-COVID and where we fell from. So I think ultimately that's a good stomping ground. And then I'm thinking probably, I don't know if we're going to get down to COVID lows, but I think, we could definitely get down to this 300, 320 area. And that's where, my ultimate target to the downside on the SPY is. So we'll see, obviously get a nice little bounce today, and we're getting it where we called it. The problem for the bulls, and there is a problem for the bulls if you look at this daily chart here. The problem is Monday, Tuesday, we had up days that completely failed. Okay, buyers got their ass handed to them. And we even pierced through lows yesterday. We had a new closing low on the SPY. But the problem is and then we got this update today, which is a pretty strong day. But, all I see, Ty, and I don't know about you, we're working off that oversold level.
Yeah, right. Exactly.
And we're not going anywhere.
Exactly. And that's what I talked about the other day. I was like, look, we could potentially just sit here and consolidate at lows, because that's one way to blow off, an oversold reading there. And that's what we're seeing is a consolidation at the bottom here. And that's what you saw in 2008 before we had another leg down, is consolidation at lows. And so it's kind of seems very similar to that.
Yeah, it does. And if you look at the 4-hour chart, Ty, what are you looking at?
Yeah, kind of. So what I was looking at here, and I talked about it on the show yesterday when I was covering the area here, is we were obviously pushing below the previous, June lows. And what you see now is we had a push below, and now we're roaring out of here. And so we're obviously now sitting in this consolidation. So I'd expect one more retest of that grab, and then maybe we get a little bit of a filter up here. I wouldn't expect a strong roaring rally out of here, but I think that we could have some room for a little bit more to the upside as maybe some type of pullback retest.
Yeah, I mean, look, anything's possible, right?
Yeah.
But I mean, look, let's face it. There's a lot of shit broken, okay? And to sit here and call that we're going to go up is, that we're going up even to the August highs is just, you got to be smoking some kind of crack, because, we just had we talked about this. We had a major event. So, you had the 30-year gilt on the UK explode 150 basis points in a week, up over 5%. So basically, you don't see moves like that in the bond market. And when we start talking about, like, even what we're seeing in the 10-year, you don't see moves like this, okay? This volatility is unprecedented. And if we kind of expand the charts out here, you'll notice you don't see really this type of move anywhere as far as the wide volume bars that you're seeing on just a daily and monthly basis. So what that's telling you is the bond market's broken. And over to UK, the issue is, they're having an issue because pension funds have a massive investment into the bonds, into the gilt, and they're looking at massive margin calls. So they were basically what was happening is basically the UK was looking at their Lehman scenario that we saw in 2008. That basically was happening today. It's basically happening this week, and it's not over. It's not over. So you had to have the bank. So what happened, Ty? What did the Bank of England do?
Yeah, I mean, look, so they basically said we're going to start buying unlimited bonds again. They're buying longer. What is it again? I can't remember exactly. What is it? Longer dated bonds?
Yeah, they're buying longer dated bonds, and the bottom line is basically, and it's the funniest thing. So they canceled QT.
Right.
Okay, so QT was supposed to start. They canceled it. And now they're back to QE. So now they're in the funny position of basically raising rates and having and easing at the same time.
Yeah, they're just fucked and they're stuck now. I mean, there's nothing they can do.
They're stuck. They've now been pinned into a corner. And what's happening is, obviously, you're getting a rally here. You're getting a drop I mean, to give you an example of what kind of event this is, the drop in the gilt today, from a rate standpoint, is a 12 standard deviation event. Okay, so if you don't understand what that means, look it up. It's a 12 standard deviation event. You don't have these type of movements. You don't have these type of events without something being broken. And remember what my pivot scenario was. Okay, the pivot scenario, and for us to go up, for the bulls to have a shot at anything, they need a reason to go up. And we've been asking for the last 4 weeks, what's that reason to go up, right? And I talked about it. Really, the only reason for us to go up is for the Fed to pivot. And so now we wake up this morning and the Bank of England is the first central bank to capitulate. And I talked about this morning, that's why it was such an easy trade. And that's why you got to be on the desk early, right? We talk about it. You got to be on the desk early. If you don't trade pre-market, then, you're left to the whims of what the market's going to give you, and you're left to the whims of algos and stuff like that. But, the bottom line is that, they capitulate. And so now what the market's taken that as a sign that, okay, well, the Bank of England capitulated, so now maybe the Fed's going to capitulate. And I can tell you right now, what we heard out of this Fed is not going to happen.
Yeah.
And I gave you 4 scenarios for a pivot scenario. And let's kind of go through those, Ty. Credit spreads widen. Okay. And if you look at credit spreads, have they gone up? Yes, absolutely. Have they widened? Not at all. Not to the point of where we have to worry. Okay. You have seen some crack. You've seen some, definitely some issues. But, you look at high yield growth get a little pop today. It's just we haven't seen the spreads themselves really get into, really bad territory. Rising defaults is the other thing. Well, we're just starting the recession. We're just starting the global recession. So, we did have our first issue over in the UK, which is a rising chance of default of pension funds because they were going to have massive margin calls, which means they would have to add to the pressure, sell to assets to meet those margin calls. So that was the whole reason that the Bank of England came out. Now, we said yesterday we thought they were coming with the interrate meeting hike, but they went the exact opposite way.
Yeah.
So it's just crazy. So, and this is exactly what happened in the 80s. Now, I actually, if you remember, 6 months ago, I was talking to you about this. So, the problem is, if you buy bonds, okay, and let's look at the TNX, okay. There's an inverse relationship between bond pricing and rates. So the TNX is the 10-year rate. So as the rates are going up, what does that mean prices are doing? Going down, right? So if you're somebody, and this happened back in the 80s, okay? This happened back in the 80s when you had all the brokers in the street, interest rates were at, just incredible. They were rising to incredible levels. So you had all these retirees that own bonds. And so what happens if some people, and including the pension funds, levered up to buy bonds to get additional interest rate? Well, what happens when rates start shooting up? The price of those bonds go down. And if you're levered up on those bonds, you now have what's called a margin call to be able to hold those extra bonds that you bought. Plus, to kind of enhance the return, you've also gone into a derivative short position, which also where you're selling, in essence, calls against those, and that's where you're getting called out of some positions. So, it's a disaster. It's a disaster. And pension funds, especially over in the UK, are historically, they have an issue over there as far as being funded. And so they're always pushing themselves for extra leverage. So that's what's going on over in the UK. And it really all started, they had good old Boris over there, right, Ty?
Yeah.
I mean, yeah, he partied and he, really, the rules weren't meant for him. But at least he had some kind of stability in his cabinet. Now we get this Truss chick, and their first act is to go and cut rates all across the board, which is completely inflationary, completely, it basically roiled the markets, and that's what you saw. You saw traders basically just throwing in the towel, and that's why you saw rates just shooting up. And that's why the Bank of England had to come in. They had to do something, or they're going to have their own Lehman crisis, or actually even worse. And so the question that I have is this, with that going on, is that something you want to be buying into?
Right. Right.
I mean, is that something, we have shit breaking and you're telling me that you want to buy?
Right. Yeah. Right. I mean, look, it's just, the problem is they're now stuck, meaning even if they wanted to stop, QE and just continue with their QT, they couldn't, because the moment they stop, what's the gilt going to do? Explode again. And so I've talked about this almost every day, is unless every central bank gets on the same page and they decide to fix it globally, you can't attack it individually. And so now the Bank of England's stuck with their QE, and it's just until it fucking breaks and things kind of restart, or we getting on the same page, it's the I mean, I'm not buying into that, so
Yeah, it's not going to work, and so what's going to happen, you know, like Borlam said, well, they pushed it to November.
For now.
Okay. Great, you pushed it to November, but then what's going to happen when the gilt starts rising again?
Yeah, for now.
Okay, because now, you know, traders are addicted to QE. And so now they had the Bank of England capitulate. So the only way they get themselves out of the box, okay, is to do an interrate meeting hike, which is again going to screw them because of what they just done as well. So, you know, what they're doing really, in essence, is creating a temporary solution to allow some of these pension funds to wiggle themselves out of the margin situation.
Yeah, right.
Okay. And so that's all they've done, because you've had this massive drop in the gilt rate. You had a massive push up in the asset prices. So what that is going to do over the next, hopefully, couple weeks, if they can even grab that type of momentum, that's going to push and allow these pension funds over in the UK to get out of their position. Now, once that's done, you know, this is kind of like, all right, we're giving you a short runway here, guys. They got to go back and fight inflation, because what we've learned, and the reason the Fed is so intent on raising rates despite breaking stuff, is the fact that what really happened in the 70s with Volcker, you know, inflation started to come in, and so they stopped. They basically eased off the pedal, and inflation doubled back and actually got worse, and it came more entrenched, and then you had that round negative cycle. So the Fed realizes they can't do what Volcker did and take their foot off the gas pedal at the wrong time, because then you're going to be stuck with inflation for another 10, 15 years. So, and then we're F. So don't look for this Fed to pivot. And if the Fed doesn't pivot and the Fed doesn't capitulate, we're going down to 3,200 at least on the ES. Okay. So, you know, this is a nice little situation. And again, who cares where the market's going to go, where it's going to go up, where it's going to go down. But the point is, I told you, bear markets, man, you get the best rallies. And today was a great one. So, you know, we had some really good rallies. We had some really good stuff. The other thing is, mortgage rates had the fastest increase ever. They're higher than they were in 2001. Mortgage rates just went up over 7%. And I could have sworn just last week we were talking about it going over 6%. So mortgage rates are exploding up, okay? Pending home sales, which is a leading indicator of existing home purchases, just, you know, completely, you know, shot the bed, down 2% month on month. So again, the leading, you know, indicators still counting, pushing us down. And don't forget, we're in a bear market, and I think most people now have capitulated. We are going to get a recession. And on average, a bear market typically sees that has a recession attached to it. There's at least on average a 35% decline. So if we look at the SPY tie, okay, and let's go to the monthly chart, and let me kind of get that off because that's ugly. Okay, so right now at this point, hold on, 35, you know, let's look where we are right now, and let me kind of zoom this down. Right now, we're about 24%. 24% from all-time high. 35% would take us right down to 300, right around this area here. So that's the average bear market return that is associated with the recession. And a lot of people, there's a lot of broken shit. We also have inflation added to it. That's why I think ultimately we could possibly get down to COVID lows. I'm not calling it, but we could. And look, if you look here, look how far away we have exponentially got away from this 200 on the monthly chart, which is something of interest, which we'll talk about later. So, you know, enjoy the rally, okay? Enjoy the rally. Participate in the rally, but don't get over your skis.
Right.
Okay? Don't get over your skis. I mean, you got the MOVE index. We've never seen the MOVE index do what it's done. You got the VIX still sitting above 30. Okay? You know, let's face it. Look, the AAII survey jumped, the bearish position jumped 15% in over a week, up to 61%. So everybody's sitting everybody's sitting in the same boat, Tyler. Everybody's sitting in the same boat. So don't get caught up into that. Now, if you look at the 15-minute, this is the 5 EMA on the daily chart. It's the momentum indicator. Look how straight down it's pointing. Now, the last time we got above here, we lasted a whole 30 minutes. So this is the area where now you're going to want to watch to see if the market can kind of hold on to its game. Okay, so the first step, if you're a bull and you think, oh, this is going to last, okay, you want to see it hold its 5. You want to see it hold its 5. It's the first thing you should be looking at right in there as far as, you know, just a short-term momentum indicator. But you can see right now, we're not even up to this high here yet. I see euphoria all over the place, and we haven't even got up to yesterday's high. So it's so funny, man. It's so funny watching the bulls, you know, running around like they, you know, the world's over. We're going up, back to highs, yada, yada, yada. And if you look at the QQQ, by the way, if you look at the Qs, okay, and again, you see this, they haven't even pierced the low yet. So we still got some work to go on the downside. Now, I would have been maybe a little bit more sold had the Qs and the IWM and all the markets kind of pierced their lows, but the IWM and Qs haven't pierced their lows. Now, there's a great trade setup. I just kind of want to show you this trade setup, Ty. There's a great trade setup for me, and I see this trade setup a lot. If you kind of look at this here, you kind of got this nice little trend line that was going on, and you had this nice little wedge in here, right? Well, you got this flat top. So you see this nice spike up here? So they sucker you and fake you out, and then they drop you and try to fake you out, and then they break you out. So nice little wedge in here, nice little fake out. They made the bulls painful. Shorts thought, oh, we're going back down. Made it painful for them, and then they broke it out and ran. So, you know, it was a good little trade today. Just enjoy it while you can. If you look in here, real rates starting to come up, which is good. And if I kind of set this way right there. So real rates starting to come up, you know, which is good. So maybe, you know, let's just watch. Still got some room to the downside. So maybe you start to see some capitulation. Really good engulfing bar today on small caps. What do you think, Ty?
Yeah, oh yeah.
So, you know, if you're bullish, the second thing I'm looking for is small caps to close this gap. And I think markets are poised, you know, they really would, it would be better, like you said, it's a better technical setup to the downside if they would come back up and close some of these gaps.
Yeah.
So
I can see that.
Yeah, so I could definitely see it too. However, you know, I noticed, I mean, there's huge put volume going on. And so at the 161 level, somebody bought a shitload of 161 puts on the IWM. So that makes me a little nervous because I don't want people reloading yet. I mean, it's not even a whole day yet, Ty. We just got the lunch.
I know.
I mean, we just got the lunch. You can't buy puts yet. I mean, Jesus. So, you know, I just enjoy it for what it is. We talked about it all the time. These bear market rallies are great. You can really make some good alpha. And, and Mal, it is a short squeeze. How do you know? Because look at the stocks are going up. The shit stocks. You know if you got Meta running, and Meta's the top on my oscillator list today, that this is a short squeeze rally.
Right, because whenever does Meta participate in the rallies? Never.
Never. Shit company, not going anywhere, and this is a short covering ride. Look, if you played this break here, okay, which we talked about, you were up 13%, 14% to the downside. So guess what? You get a little rally, you cover your shorts. And that's all we got. So enjoy it, trade it, don't sit on the sidelines, get off your seats. I had that conversation with our traders this morning. Don't sit on the sidelines. You can't be waiting for every freaking trade to set up. Let's go. Going through a couple other things real quick. VIX, and this is the other thing. So I finally said it. This is my zone, Ty. I said, look, I'm not looking for a rally until the VIX can get up in this area here. Remember us talking about this last week? Well, guess what we did? We finally got the VIX up into this area, and now we're getting the.
Now we're heading back down.
Now we're heading back down. Now we're getting a nice little rally. So everything was lining up to the upside, but again, VIX is still above 30. The second thing you want to see as a bull is to get the VIX at least back down to the 27, 25 range. And then maybe, some things are getting figured out. Okay. The dollar, I know you're going to talk about the dollar, but I mean, so much for the blow off top.
Right.
I mean, maybe now you're going to be able to come back and say it's blow off top, but it's already 3 days later. So F you. If you always say it's a top, then it finally goes down. Oh, you're right.
Yeah.
After being wrong 10 times. So, I just look at Twitter and it just infuriates me. Some of the people. I got to stop going on Twitter. Is what I got to do. But if you look at the XBI, kind of at an interesting level here. We talked about this. This was another kind of in the quiver we talked about this morning with our mentorship group. Had a nice little pop up here. Kind of bucked the trend yesterday, and then you had a gap up. So again, still at lows. Nothing interesting for me. Transportation index still, getting a nice little bounce out of here. But I mean, look, it's fucking at lows. Banks are interesting. Again, banks are kind of reclaiming this area. Kind of, maybe this kind of, here we had this kind of like look below and then kind of nice little rally. That's what you want to see if you're the bull. That's what you want to see. So it would be great if we got that kind of rally, but don't hold your breath because I'm not going. Okay, XRT, retail still down, still lows, still not looking good. Semiconductors getting a nice little pop today. Could have bought into some of them, but look, I mean, it looks like every other green day that is, very few in the forest of the red. But I'm curious, Ty, what your take's going to be on the dollar. Okay. Because look, the trade has been follow the dollar, follow rates, follow the VIX, boom. So eventually that's going to come off and these things are going to settle down. So let me know what they look like.
Yeah. Enable sharing so I can share.
I'm not a good sharer.
You don't have to look at my charts. They can see my charts. So yeah, I mean, look, I talked about it this morning when we were consolidating at highs on my stream, and I mentioned we were maintaining bullish structure above this breakout at 114, 115 area. But it seems like we didn't have much strength in it. We saw the consolidation here. We saw the lack of volume, dropping of volume in here. And so I thought we might be able to hold up, but I mentioned if we break through this 114.13 area, then we're going to get a nice steep drop down to 113 most likely, and then a continuation down from there. And if you look at the price action today, I mean, it did exactly that. It broke through 113 or 114.13 and went right to 113 and lower. And so I think that we could have a potential continuation with this. I mean, look, if you look at like pound USD with the flash crash, I mean, this fucking thing was sitting at like it was sitting at like 7.9 RSI. Of course, you're going to get some type of bounce and a little bit of a deviation away from that, or a deviation pulled back towards like to the average price. But like overall, you got to think about it fundamentally. That we're getting a pop technically because of oversold levels, but eventually it's going to start rolling back over again. And I think that's what you're seeing kind of market wide with the dollar and everything else is we were hitting extreme levels. I mean, if you look at the dollar on the weekly, I talk about this zone a lot, this 114 to 115 extreme level on the weekly and monthly. We were hitting extremes in the RSI, and so now
it's parabolic, for crying out loud.
That's what I'm saying. You
don't see a move like that in the dollar.
Yeah, exactly. Yeah, right. You're seeing a currency go parabolic, basically. And so what do you get? You get this, and it was at an important level, and so you're seeing the pullback that we've been waiting for. Now maybe you get a 2-day continuation with this. You get a pullback down to 110, probably around 110 is what I'd expect. Retest. So if I darken this trend line here. Retest these ascending lows that we've been riding the whole way up. So let's, 109, 80, 110 area is maybe we get a continuation down, but this is just one of those pullbacks that we've been getting before after a very parabolic and extended run that we've been seeing. And so it's just the pattern. Obviously, it's an extremely strong, monthlies at 77 or monthlies at about 80. So we could see a month of pullback. I talked about this before, is maybe we see a consolidation, some type of pullback. We'll see the same thing in the market, and then we get that continuation. So maybe this is where we slow down a little bit, but I don't think that we just fall apart and everything, just reverses back to normal. I just think that this is a oversold technical rejection that we're going to, pull back or consolidate around. Everyone's short euro, long dollars, getting their stops run over. Yeah, and that's another thing, is it's just once you saw such an extended move, then people start, getting out of
but those
positions.
stops are profit stops.
Right, yeah. What, for what?
I mean, they're profit stops, meaning that,
right.
Absolutely. So, but they're, most people weren't buying the dollar up here.
Yeah, no, right. I mean, if you trade the way I trade and trail the structure, I probably would have trailed my stops somewhere below these lows, because after a break structure, we're probably getting a little bit of a pullback. You can reload somewhere down here. So it's just like, it's just an overextended, pullback. Gold is just an absolute animal today. It's so gold. Bank of England stole 16,000 from me because I was short pound yen overnight, and it was so close to my take profit. Would have made me 16,000, and then that Bank of England. I'll show you the chart on pound yen a little later, in a little bit. But Bank of England wicked me out, and then it went right to my take profit, and so I was pissed off, and I had vengeance. And then so I said, gold, you're going to make that money back for me. And I bought gold down right around 1627, somewhere in this area here. After the Bank of England came out, it seemed very overextended. Meaning, if you take a look at price action, and you see that we have this big drop, and then we have a small rebound, small drop, small rebound, small drop, as we're creating these lower lows, but there's very low volume in it. And you can tell on the RSI that we're creating higher lows. It was just, it just felt very sluggish to me. We were at a strong level, back in 2020, I believe it was, or it was back in 2020. Strong level back in 2020. And so if you take a look at the overall structure, I drew this trend line, and as we were coming up and breaking through it, and retesting the backside of it, this is where I stacked 2 entries, and I just felt like we were going to get a big squeeze today. We had the dollar dropping off top, and we had the Bank of England coming out and capitulating. We had it just felt like one of those days that we're just going to get a massive squeeze. And so I rode this thing, bought it there, and rode it up to around 1650 area, right in here. And that's, if you want to see what 20 grand looks like, this is what 20 grand looks like right here. And so
yeah, baby,
it was just it was too easy. It was like a layup of a trade here. And so ended up doing really well. I'm actually, I think we're going to get a pretty decent pullback here. Looking at this area on the 4 hour, we're now approaching and retesting our breakdown here at 1660 area. And so I think we at least get a 4 hour pullback down to 1648. So looking for shorts here on the way down. Well, I'm already in one position short, smaller position because it's midday. I don't typically trade midday, so it's smaller position short here. But I think we'll get a nice pullback. I mean, it's very overextended. Look at the hourly, look at the 30-minute, look at the 15-minute. It's just very, very overextended right now. And so that's why I took a small position here based off of a 4 hour resistance. And it's midday, so there's really no volume. So maybe you pull back a little bit. However, if you look at the overall structure, longer term structure, maybe like a couple weeks out, we did finally now break through these highs. So I think what we get is a pullback. We're baiting people in, stopping people out, and then a continuation. Because I think we get a little bit of an extended rally out of this, all across like the dollar, gold. I think we get a little continuation. Maybe not much, but I think it's overdue for it. And so that's what I'm looking at for gold. Just a little bit, just the tip. Oh, Jesus, born alarm. Jesus Christ.
I never seen any person like Born Alarm just sexualize gold and oil.
Right. That's what he does with gold, man. I swear.
Oh, okay.
And then
Good
oil. Oh, Mike, you weren't on oil yesterday. So yesterday, I said oil's coming to be a great buying opportunity, and it goes up 7%. Now, I didn't say buy yesterday, but I said that keep an eye on oil, because oil, I think, could be a really, really good buy soon. With a bunch of other factors that I mentioned yesterday, I'm not gonna make them listen to me again and yawn on about oil, but I think that it could have a nice rally. Now, I don't think this is it. I think we see one more leg down, but it's definitely pricing something in. It definitely had. Was that?
No, I agree, and I had this level drawn forever, and if I can share real quick, and I'll pop it back to you. But I was telling Simon's in our mentorship group, and I had this level because this was a level back in 19 that was a top.
Mm-hmm.
This was a level that was a top right here in July, and so I had this level drawn, and you can see just right where we are, just nice action off of.
Yeah,
so,
no, that's the exact same level I had drawn as well. I mean, it's
those levels work so great.
Yeah, I definitely, and you're seeing a 3-day hold there, and so you've seen a nice rally. Crude and oil inventories come out, beat expectations pretty heavily, but it's just moving up very strongly based off the dollar pullback, based off of the hurricane. That's it's not a big deal about oil production being shut down. Only a little bit of production shut down, but the hurricane. Then you got the Bank of England. So it's just you're seeing a nice oversold rally off of a nice level. So I'd be watching and stalking oil because I think it could be a potential buy, especially October 5th is OPEC meeting. They're going to potentially talk about $1 million per day production cut in November, which then will give us a nice potential rally out of there as well. So definitely stalking oil here. I think we have I think we pull back some more. It was a very strong day. I'm looking at like 83. It's stalking 83. If we hit 83, I'll probably look for shorts. It's coming up close, getting pretty overextended. So between oil and gold, we could have some really nice pullbacks here for a continuation, but just watching those. Bitcoin rallied a little bit. Still hanging out at lows here. Just if I zoom into price action here, it's just still going sideways. But I mean, that's pretty much it. I mean, I still, it's just this wick here. If we break through 20,500, then maybe you get a rally up to 22. But it's just there's too much volume in here, and it spends a lot of time in here that we'll have to see, where it goes from here.
Right.
And then
Right.
the freaking pound yen play, before I hand it back on over to you, and Mo, I'll look at TNX for you in a second. I was short pound yen right in here. We had broken structure. I thought we were going to get a nice continuation down to fill some of this move that we had after the flash crash. And so I was short overnight during Asian session, stop above the high here, take profit back down into this zone right here. It was about a 6-to-1 play. We were looking good. Bank of England comes out, just nasty wick, and then it ends up going right to my take profit. So that was a $16,000 miss for me, and it just it was just brutal. And so I was pissed off, and so I came back with vengeance. Ended up making 20 grand on gold and worked out well. So
love it, man. I love it.
But that's why you got to keep your head in the game. See, I could have sat there and fucking emotionally melted down after missing this move, but kept my head in the game.
I do that. Let me do the melting down.
Yeah, you melt down. But TNX, Mo, yeah, I talked about this on my show this morning as well. Is this morning when I saw that we were breaking through, this weekly trend line. I expected that we'd continue to get a little bit more of a pullback today. I think there could be more in store for this pullback. I mean, we were very overextended. We were sitting at 85 on the 4-hour, higher time frames overextended, and so we're seeing that rubber band, that snapback, and so maybe we come back down to retest like 360, that breakout point potentially. Just to fulfill this break here. I mean, if you look at this trend line that we've been riding like almost the whole way up, that would come in line with 360 retest. And so I think we get maybe one more extended pullback on the TNX, but like Mal said, overall
don't fight the Fed, baby.
Exactly. Overall, I think we're destined to continue higher. So I wouldn't be, I'd be watching for that as well. But,
yeah, and I like the June high, which is the 3483.
Yep.
Level.
30,
so
yeah, right.
Yeah, I mean that's ultimately where I want to see it. As far as hold, I mean that's just happens to be the 21 EMA, which would keep the active sequence going. And right now it hasn't even come past the 9. It hasn't even come down to the 9. That's how over. And Mal made a great point. I mean, what a great chance! What a great place to reverse from the 4%.
Right.
I mean, Pierce 4%. Get up to 4% yesterday, and then just go. But yeah, I mean, and look at the historical chart. I mean, we kind of brought up the historical chart. It just, it's a disaster. If you go time frame wise, I mean, do you have the historical up, Ty?
Yeah, I mean, I'm looking at the monthly right now.
Yeah, I mean, just.
I mean, look, this was obviously this $4, not only a psychological level, but a very, very, very strong level of resistance. However, looking at historically and technically, I mean, 5, I think, is in store for us. I mean, if you look at this area, and I this is a play I do all the time, is these trend line breaks. We had a trend line break here back in October of last year, and we've been going up ever since. And now I always talk about, look at the most recent points of intersection. We already stalled at 1, and now the second area of intersection is 5. And then maybe we stall from there. But I think that, right now we're stalling at 4 because it's a strong level. But then the next level that you definitely want to keep an eye on is 450 and then 5. So as far as are we going to 440, I think, in my opinion, there's no doubt we're going to 440. But yeah, we'll see. Back to you, Mike.
Awesome. Great stuff. Okay. So look at the internals. Okay. From yesterday, we had extreme low ticks here. Going into the afternoon, we had, some extreme high ticks. But trending up all day from the tick. Look at the cumulative tick. Look at the, we're at 88% volume update, Ty.
Jesus.
I mean, just look at it straight up as far as the breadth. So the breadth today is impressive. It's strong. We don't short into these days. So if if anybody's wondering, if we're going to go short into any of this these days, not at all. I mean, you got the dollar humping it down. You got, the 10-year humping it down. You got oil going up. So right now, just enjoy the trade for what it is. We're starting to see a little bit of a rounding top. What's going to be interesting to me, and to me, look, for me, again, this trade has worked so well. But the other thing is, as far as, look at the sector list. Look at our sector list. I mean, look at this. Oh, utilities, finally. I didn't have a red one on my list the whole day. Utilities finally going red from the open. So, I mean, BTU, well, I mean, it was a great trade. I'm in BTU, guy. So, and it's the top of the list. So, what do you want me to say? But anyhow, I mean, look at this. You got K-Web, you got Jets, you got ARC, some of the shit companies. And I do want to apologize to Mark. I really don't use Meta, so maybe it is a good company. I just think they don't have a good mission. I mean, I think they're just I don't know, but we'll see. We'll see what happens with Meta. All I know is the chart sucks, and you couldn't have me buy it other than a trade today with the 10-foot pole. So, but anyhow, I just want to show you, look, how crazy this is. God, I hate that. I do that. So let me show you, and I'm going to pull up a comparison study in here. And I pulled it up in the morning. It worked in the morning great. So I'm not sure if it's still applicable, but I'm going to add a study. I'm going to compare, and I'm going to compare it with the TNX. Or actually, I was going to compare it with the TLT. Compare it to TLT. Okay. So, look at this comparison. And this is what I used in the morning as, rates right here. And you can kind of see in here, and let me get it back down to zero ground. So you can kind of see in here rates. I mean, the way the market goes, I mean, look how it's going with rates. Excuse me, with the price of bond, which gives you that inverse relationship. And I had this overlaid, and we were trading in the pre-market with this overlaid, and it was just amazing. It was just amazing how it was working in real time. So this correlation eventually will break, but it's been a great correlation for us today. Now stocks today, we had a great list. I mean, just money made all over the place. It's just, and I'm glad you made that 20 grand. Because you had made that 10 grand, what, about a month ago?
Yeah.
So, and this goes to my point. You got to be, as traders, you got to be ready to go. You can go 10 straight freaking days losing money or just treading water. Mm-hmm. And it goes to my philosophy. It's the 20% days that you got to win, right? It's the 20% trades that you got to win.
And with that, it's super important that when those opportunities come, you take full advantage and actually let the trade play out. I could have gotten out for like a $3,000 winner, but you got to make sure you see the potential and juice out those big plays, or else, when you do tread water and you have the big plays, you're not really breaking through as much as you should. So it's definitely important to keep your winners running there as well.
And that's a great point. The analogy I used with my group this morning, if you're in Maryland and you're getting on a train to fucking California, don't get off in Cleveland.
Right.
What the F? It's just crazy, man. So, Netflix, look at this. Now, in the beginning, I only took, when we weren't sure what the markets were doing, took a 1-point winner up in here. But then as it came back into VWAP and as we were breaking this 52-week high, here's where I was like, okay, game one, time, just let a runner go, put it on, and off it went. And just look at this. Right, look at this trade. 10 points. 10 points. So a couple trades in this one. This was really good. And just like you said, put the trade on and let it go.
Yep.
Walk away. Put your levels in. Okay? The other trade, and again, still in this one, BTU with the runner. Look at this. Up 10% today, Ty. Off of a dip buy. So nice, perfect dip buy in here. Again, it's a trade. Just let it go. Let it go. Another one we had on our watch list today, Apron. Look at this dip buy. This one's up 17%, Tyler. Let it go. Okay. So this is one, again, bought it down here, took some off in here, got back in. It was a nice VWAP, and then off you go. It's just, just really good trades today. And, I also had, I mean, look, the story, we didn't even talk about what was moving the markets, because the Bank of England was really the thing that was really kind of the ultimate thing. But, I mean, in the beginning, overnight, and if you look at the SPY overnight, okay, you had a nice little pop in here, this nice little double top, right? And the pop overnight was, I'm sorry, it actually, that pop was right up in here, was Biogen. Basically coming some really good news from their studies on Alzheimer's, which is a great thing. And so you had the market rocking up. And then what happens? Apple shits the bed. And it turns out that inside sources say that Apple is seeing very slow demand. So that pretty much just knocked the market down to lows. When we were kind of, very positive, but yesterday, very, very positive on the Biogen news, but the Apple news just completely knocked us down. That's what you get in bear markets. You eventually get those warnings. So with that said, I mean, and if you look at Biogen, you can see, I mean, just nice little pop up. So, from down 200 to almost 300. So nice little gap up. Biogen has these gap ups. It was a good short right off the gate. If you shorted it, it was a great short, but still holding up. But Apple, and then you look at Apple, right? And I actually took a dip buy. And good thing I put my trades, in the morning. Look at this, Ty. Look at this nice little drop. Right here I called off the 145 level. We got in at Apple 145, Tyler. 145. So, and it was a short trade. I mean, we got in off this on this retest, and we said, look how short my stop loss is, Tyler. I mean, it was a whim. It was like, okay, I'm trading against this level. They're bringing it back down. It's kind of same pieces you had with the SPY, and I'm ready to go. And so great trade. Now, I only took 50 cents in the beginning, but then, we had some traders in our group that, is still holding into this. So, hopefully $3 on an Apple trade off of a low, I think is, I mean, look where it crapped out at pre-market high. So that should have been your target. So hopefully if you took that trade, you got out. But that was kind of the story today. You had Biogen, you had Apple. Now, off the Biogen news, I know Bornholm put a bunch of shitty tickers in there off of that. I mean, every ticker he put in his group, his Alzheimer group, and they all were like stocks where you got the dashes. And I'm like, I can't trade that stock. I can't trade that stock. I can't trade that stock. It was every stock I couldn't trade. So I finally found one that did well that he didn't have in his group in his list. I was like, well, how did you not have this one in the list? As far as was this Parthena, this PRTA, and this gave a great trade off VWAP. So, and I put this one into the chat. So the only stock that gave a great trade today, the least that I saw on the upside out of that group, was this PRTA, and it was a nice. Yeah, I know. You did say it was a super old list. But I took your list and I went through every single stock for them. And anytime you see those dashes during a regular trading day, I not enough volume for me. I got to stay out because that means spreads and means I'm going to get stuck in it because, Mike is a scaredy cat. So, yeah. So, but good. I mean, we were like 100% on our trades today. I mean, it's just crazy. Saba was a good short. I don't know if New York Chris caught this one, but look at this short. Look at this. And I talked about it. It was like getting going. It was above 50, above VWAP. And then once they cracked down below, it's just nice. They couldn't get it going. Back down. Thank you. Thank you, Tyler. Thank you, Tyler. Chris, New York Chris, I know he's not in here. But I mean, come on. Tyler, you muted?
Yeah, I was.
Say that again then, because it was a good saying. You're not gonna be able to say it with the velocity though.
Yeah, right. Now, I was saying that this is one of those textbook plays that when you get that ramp up overnight where it starts running pretty heavily and it starts trickling down and bouncing back down pretty heavily into the open. When you get that ramp up into the open, you want to short the fuck out of it because that's just one of those last ditch squeezes before this thing starts going right back down even below the yesterday's levels. So those ramp ups in the open are fucking huge short opportunities.
Yeah, look what it bounced off of.
Yeah.
Yesterday's high.
Right. It filled that gap up and then it ramped up and then it just shit itself again. So those are just, yeah.
See, when I had Tyler on the dark side and he would trade penny stocks with me and shit like that, this was your play, wasn't it?
Oh, yeah, absolutely. Those were the best.
Yeah, it was good. It was good.
And then I came to my senses and now I'm trading gold and oil.
Yeah, you go from trading penny stocks to gold and oil. God help us. CCL, Carnival. I mean, if Carnival Cruise Lines is running, then there's something wrong. Okay. Another play that I didn't have on my list, Ty, but remember Nick's not in here. He's the one that knows this play. Every hurricane we trade, what stock do you think we trade over every hurricane? Home Depot, baby. It's like clockwork.
Yep.
So I'm so upset I missed this one. I tell you what, when I first started trading, back in the 90s, and the very first thing I learned is that the market has these storied stocks, right? And every November, Ty, guess what stock I started out trading that it was historically you could count on it like, anything else. It was Toys R Us. They're not even in business anymore.
They're out of business now.
But Toys R Us, you could always count on a 20% pop because 80% of the revenues came from in the last quarter. And the stock, it was like going to the ATM machine, just taking out money, and you could always go print. Well, it's the same thing with Home Depot. Every time there's a named hurricane, Home Depot's my stock. The other one's the generator company. I forget what if it's a really bad one, that one usually goes up too. But Home Depot's the one, and I forgot to put this on my list, so I apologize. I was too busy trading this morning to really focus and hone my list greatly. But Home Depot, great trade today with the storage stock. Other stocks doing well. I mean, you got Canadian Railway actually, believe it or not, nice bounce area off here. So you actually had that stock kind of going. Yeah, it was Generac. Generac was the one. It's like $500 stock when I was trading it. Yeah, see, it was $500 stock. So it's up 3%. But, I mean, Home Depot's a lot better. Yeah, and it didn't even give you the good action. So, but, yeah, if you have a really bad one, Generac's the one that I would kind of pop in. Other stocks, Oxy, Oxy with oil going up, that's the stock to get in. So you guys should have had that as a play. Nice little run up today with oil going. So it looks like Oxy's destined to close this gap. And I did show you BTU, right? Yeah, that, I mean, look at this. And, hopefully Desire, he's part of our mentorship group. I love these trend line breaks. He had this on his list. Look at this one, Tom.
Oh, those are my favorite. Oh, yeah.
Yeah, look at this. So nice trend line break yesterday. So you got 3-day run. This is not just going up with the market today. Yeah, a nice little 3-day run up in here. So nice trading opportunity right there. This was the star play of the day. So Desire, I'm hoping you were able to hop into this one because that was a good one for us. You got the other stocks that have been really beaten down, like Microsoft really doing well. So, but again, is it really moving? Look how, so just like we have an active sequence with the 9, okay, on the upside, look how the 9 has been a lid, Ty, except for a little bump up to the 21 here.
Yeah.
So, I mean, this has just been, a lid. And so even with today's action, you can't even get a bump over the 9. Give me a break. So tough, and again, tough trading action right there, but it was a good trader today if you traded it. Tesla, Doji, don't want to even, I almost got into a Tesla trade today, but there's just too many other good plays to really, work about it. ARK was doing good. I mean, ARK kind of, shit stocks kind of get a little pop up before it heads down to 0. So nice stopping ground. Lululemon actually coming up with some fitness stuff had a story which should shit on Peloton. So Peloton's down. It's heading to bankruptcy. It's down in an up day. So what do you want to say? It's because they got competition now from Lululemon, and so that's what you're seeing right there. So JT said he traded Oxy today. Good stuff, JT. It was a good trader. So I'm glad you did. And Michael S. had a good trade in MPC. He had done, oh, look at S. Good one.
Wow.
He had this on his watch list this morning. So, and I think he posted the chart in Discord. So everybody had a chance to look at this one, Ty. Man, Michael S. gets the winning trade today. Michael S. had this in Discord this morning, right? Michael S., confirm with me that you had this in Discord because I'm too lazy to go back and look. But Michael S. had this call out, and he had the escalator.
He found the escalator.
You found the escalator. You get the escalator award today. Great job. Look at that, man. Riding the lightning up on the 22.
Damn.
Yeah, see? Man, Michael S., got to give you your props. Great trade today. The question, what stop did you get?
I was going to say, yeah.
That's the question. What stop did you get off? And if you got off, did you have the foresight to get back on?
Right.
So that's the question right there. It always is the question. So good stuff. JT had a good trade. Looks like Michael S. had a good trade, just going through Discord, seeing if I'm missing anything.
Chris missed that damn Sava. Shake my head.
Yeah, well, he's going to the woodshed this afternoon. I have a feeling Chris is going in the woodshed. He's got too many computer issues. I'm about ready to put him in the woodshed because he doesn't know how to. Evidently, doesn't know how to build a fucking computer.
Yeah, come on now.
So. All right, that's about it, man. Look, stocks trade. I mean, when you have a list that looks like this, guys, when your opening print from the opening print looks like this, I mean, our BTU trade 10% from the open. You got your ARK 2.7% from the open. I mean, you could have traded any of these stocks in any of these industries. You could have rolled your mouse pad out and made some money. Apple was a great dip buy. So, for me, short-term trade only. I mean, if it breaks this 148.37, then maybe, it's hard to buy breakout trades in this market. So I'd be careful on that. As far as the SPY, Ty, what are you looking at here? I mean, the dollar just at 112. It's not falling apart, the dollar.
Yeah. Hop in the 4-hour and zoom in to the last 2 days of zoom pretty closely in to the last week of price action.
Let me hop in the. Hold on. I'm gonna fuck this up. So let me hop
Jesus.
in the board. Shut up. I got. Oh, see, I told you I was gonna f this up. Hold on. All right. So shut up. I got so many freaking charts here, man. It's all right. 4-hour Ty is all yours.
Yeah, zoom in really close. Yeah.
Really? Oh wow. Usually you don't want me to zoom in.
No. So. Definitely where we're at now is an area that I'm watching on my chart here. There's a lot. There's 1, 2, 3, 4, 5, 6. There's 6 4-hour wicks on, and I look at the ES, but on same zone here as far as where we're at now, where we're dipping into, and so I'm going to be interested to see where we go from here. If we reject this zone and head back down, then we are most likely retesting 365 and then rebounding. If we close back above and get an end of the day rally back above 371, then this is going to be a strong 4-hour close above resistance, and then I think we get a little bit of an extended rally to like 385. So we're in one of those zones that's going to be, you know, very telling on where we're going the next, like, you know, day or two. So
I like that. Hey, Ty, can you pop in the chat our Discord link?
yes.
So Ebenezer, welcome, bud. You know, this is why we do this, to kind of help out beginners. Hop into our Discord and you'll be able to get some ideas of some plays and stuff we're doing just to follow. I mean, it's not really, you know, we're not looking for anybody to mimic anything, but we're trying to help people out. So it's nice to have Ebenezer Scrooge in here.
Yeah.
Especially with Christmas coming.
Yeah, exactly. So it's
so
yeah.
So Born Alarm, tell me. I don't know. Look a little head and shoulders here. I guess not. It's not truly a head and shoulders.
Oh no. Uh-oh.
Born Alarm, you gotta let me know. You're the head and shoulders expert. You gotta let me know if this is a little head. I mean, we haven't even gotten up to Friday's high. I know IWM has, but the fact that we haven't even gotten up to Friday's high, you know, it's going to be an interesting close. Yeah, it does look like a little head and shoulders top forming. So, you know.
Oh yeah, ES. Oh yeah, look at that.
Look at that, baby. What's the 5
Looks
minute?
like it's. I'm taking a short into the close here, or the end of day rally.
Yeah.
All right,
Yeah.
fine.
Well, look. So to me, where you're shorting off this Ty, I mean, it's hard to trade breakouts, you know. So maybe 37.11 here.
Yeah, I mean, when I trade head and shoulders, the way I'm trading it right now is I'm taking a sell now, and I'm looking for this to be the top of the right shoulder, and I'm going to anticipate the break of this neckline and sell into that. If you're not much for an anticipator, then the neckline here is 37.10. Look for a break and retest, short at the neckline, and then look for a push down. There's a couple ways to trade it, but that's how I trade it.
God. Yeah, I mean, that's the thing, and good point. You know, if you look at the vol, I mean, it's so hard to short into that. I mean, you know, when you got 80% up volume in here, and you see something like this, it's hard. I almost have a rule not to short into that shit. I don't know, Ty. What are we going to do?
Yeah.
You're going to wind up chopping away your 20,000 profit.
I'm going to turn it into 40,000.
I need to see this turn around.
Only short if your name is Tyler. So. Nobody's short in that.
List all the things. What are you guys? Are you really Cathie dementia? He called Cathie Wood. Mo called Cathie Wood Cathie dementia.
Oh my God.
Cathie Wood built the woodshed. No.
Yeah.
Okay, and I think she realizes she ain't getting much more inflows, so she is going and creating. I think she's creating some other funds.
Yeah, she is.
So we just got some news. Citadel's Griffin says 10-year Treasury yield at 4% looks pretty compelling. So whatever that means. He also says stock market is looking pretty good compared with economic conditions. Yeah, that I agree. I mean, compared with where economic conditions are, the market is really not falling apart.
Right.
Yeah, but who cares? Yeah, doghouse. That's right, JT. Cathie Wood built the doghouse. So, all right. Well, the question's going to be, will Valdi hold up and prove Tyler wrong on this head and shoulder short, or will Tyler prevail?
Tyler always prevails.
Yeah, that's when you get cocky. That's when you know you're going downtown.
Oh no.
Oh yeah.
So you know you're about to double your money.
Look at the Dixie, man. The Dixie's falling.
Yep.
Not chopping up my farm.
And I'm short gold. What are you gonna do about it, huh?
I'm not sure.
You gotta have big kahunas like me when the market's just strong. You take the shorts.
Yeah, you're fucking got your ass in a sling in gold.
That's right, baby. Got my nuts on a chopper.
Yeah, well, I guess, if you got $20,000 in profits, you can do that.
Yeah, right.
Ever. I don't know. I know the market's kind of rolling over a rollish top, but I'm just waiting for confirmation. I'll join you on the backside. All right, guys.
All right, guys. And thanks for tuning in today.
No, Nick's not allowed out yet. Okay.
Dude, what do you mean? The market's moving and Nick's not here.
Yeah.
All right.
Nick moves the markets.
Yeah.
All right. Yeah. Well,
call it there.
Nick's, Nick can only come out in certain spats. We lock him back in the closet because he actually has a crystal ball. None of us do. So. All right, guys. Well, stay safe out there. Hopefully you guys are enjoying your profits today, and see you tomorrow, right, Ty?
Yep. See you guys.